Hello and welcome back to the channel, everyone. In today's video, we're going to talk about the topic of scaling in and how learning to scale in can help you to get more profits out of your trades. Before we get into today's video, I have a free trading course that you can sign up to using the first link in the description. That's going to get you a 13-part video series covering risk management, technical analysis, and trading psychology. So if you want to improve your trading, do that. But first of all, watch this video because there's a lot of value in here too. So what do I mean by scaling in? Well, scaling in is the process of increasing your trade size as the trade progresses and as the trade moves into profit. Scaling in is good because you can actually increase the amount of profit you can bring from a movement without adding any risk. By allowing a trade to move in the direction you want it to move in for a while, you can then add another position completely risk-free. Because let's say we have this initial position from the start of a reversal. We can hold this towards our targets, and then when price actually makes a push down and then pulls back, we can add another position. And while we are then risking 1% here, for example, we have that risk covered here. So if this loses, we're still going to end with a small amount of profit. When the market then makes another movement, the next pullback can be scaled in once again. We can add another position with another small bit of risk. And then by this time, this is risk-free as well. We can trail all the stop losses to this level. And then if this trade loses, we will lose 1%, but we'll make combined probably 5, 6, or 7% on these two movements as well. So scaling in is a very strong and helpful tactic to actually help you improve your profits without adding more risk on the table. So what is the basic premise of scaling in then? Well, the first thing we want to see is obviously the reversal, where we initially execute a movement. And then the scale-ins are actually continuation moves. So let's say we sell into a reversal here, we get that break of structure, we know the market is making a downturn, we get our initial position on. All of the scale-ins are just going to be following that order flow, right? When the market is moving down, on the pullbacks, we're going to add no moves. When the market finally reverses, that's going to then take us out of all the movements for a profit. So let's say, for example, we did add a scale in here and it lost. This is going to stop us out for minus 1%, but it's also going to close this out for plus 3.5%, and it's going to close this move out for plus 5% as well. So you can see here we have minus 1, plus 3.5, plus 5. So we have around 7.5% actually secured here, even though the trade didn't work all the way out. Now, if you hadn't added scale-ins, you probably would have just got stopped out on this one. Still would have been a 5% movement as long as you are trailing your stops. You can add another like 50% of your total profit on top, okay? So rather than taking 5%, we get to take 7.5 just because we've scaled in. And then the other benefit is if it does come all the way to target, we get some insane profits. You know, you're looking at a 10R move, a 11R move, and a 13R move here, which all could have been fulfilled rather than just holding that initial first trade. Now, obviously, your risk reward is not always going to be this high. It's not always going to work out perfectly, but by actually scaling, you are adding more profit potential without adding more risk. So let's go and see this on the live charts. For our real market example, we're going to look at GBP/JPY. In this example's sake, we just hit a supply zone and then we formed this bearish impulse, which broke a previous structure point and has put the market into the beginning of a downtrend. Now, we can actually look to sell GBP/JPY then from a supply zone just above price. So if we go ahead and put our initial order on like so, let's say we can just target this imbalance for now. We can then actually get into the first movement, allow that to start running. And if it runs successfully, what we can then do is look to scale into the movement as it moves down. So what we'd be looking for then in scaling in is actually a break of structure. Like I said, the first trade is a reversal trade. And from there, we want to just have continuation trades. So every time the market makes a new lower low, we can then target supply regions to actually then sell in from lower highs and continue the trend down. So right now, there is no reason to scale in until we break that structure. But as we can see here, we did actually go ahead and form a nice little break of structure there. So what we could do is look towards supply zones. Okay, so let's just say for this example, we're going to target this supply zone because this is the zone that broke the structure. Okay, we do have this zone which we could focus on as well, but this is the real zone that formed this bearish impulse that has pushed through the low just here. So what we can then do is add the secondary scale in. We could go for the midpoint or the top point of this zone. And let's say we target the exact same place because this is obviously just where we're looking to take the trade. And then if the market pulls back and retests that region, we get into the position. And we're in a kind of win-win scenario here because we either continue the movement and profit on the first one, or if we do get a pullback, rather than just stressing that the trade is reversing, we get to add more positions. So we've added a secondary position here on this scale in. And if the market then continues down and breaks the low once again, which we can see has just taken place here, we can then look to add yet another scale in. So the thing to do here would be to look for the high interest supply zone. Now, personally, I like this area because this is the last distribution area before the market sold off. You may also look towards this area up here in the extreme. So what we could then do is place another order on and see if the market is going to fulfill our order, and if it is, will it continue down into profit? Now, another thing to consider here as well is the stop trailing. When you are actually scaling into entries, you don't just want to leave your stop losses as they are. You like to follow price down. So once we have this initial movement going, we can obviously wait for the lower high to form, and then we can move the stop loss to the same stop loss level as the scaled in trade. So the initial stop from trade 1 could be moved to here. Now, if this gets stopped out, we're going to lose the 1% there. We're going to make around 2% there. Same thing again. Now we've added the secondary position, we could go ahead and move all of the stops to this level. And then we're either going to retest this level and then sell off, or we are going to come in and actually close out the trade and actually just, take all the profits on this movement. So we can see here the market is making a little bit of a move up. It's possible that we get a impulse all the way up to the higher zone, in which case we are going to get taken out. And as you can see, we've been taken out of this position now, for example, minus 1%, but we've also closed this position for plus 3%, and we have also closed this position now for plus 4.5%. So that is a 7.5% there and a minus 1% here. So we've turned a move into a 6.5% profitable move. Now, if the market then wants to come back up and start selling off again, we can always look to continue the trend down. Obviously, it's not always going to happen. Sometimes, the trade's going to reverse. But what this means is we can actually profit even when the market doesn't go all the way to our targets. So if we remove some of these levels now, what we would be looking for to continue trading this down is a break of this low structure here. So if we can get a break of this low structure, that's going to open up more space here that we can trade into, and then we could start the scaling process once again. So obviously right now, no action is to be taken until we get a lower low. As we can see here, we've actually just come down and pushed this low, forming a new lower low in the trend. So what can we do? We can begin the scaling process again. First of all, with one trade at this supply zone here, being the zone that broke the structure. So we could put our initial trade on. And if this does get triggered successfully and we don't get stopped out, what we can then do is look to scale more into the movement. So allowing the market to play out, we will see if it's going to come back up and retest that zone. And as we can see, we've retested that zone now, and we have started selling off once again. So by now, I hope you're getting a grasp of what we should do next. We should wait for a break of structure, and then if we get one, we can look to sell into the market with continuation movements. As we can see here, we have had a lower low form. This is going to be the zone that broke the structure. So this is the zone I will focus on for this short here. And if we go ahead and place a scaled trade here, what we can then do is bring the stop loss down from the initial position. So if we bring the stop loss for this position down to the same level as the stop loss for the new position, we are then securing profits. So you notice how we are adding 1% risk, but we're actually never adding risk because we're just using the profit from the previous trade. If we leave the market to play out, we will see, will we get a retest or will the market continue down? And there we go, we've been retested in, and the market begins selling off once again. So as you can see, this is a very effective way to add trades without adding risk, without adding stress. Now, obviously, if we look towards, how far the market's moved now, we've just turned a, potential big trade anyway, a 15-hour trade there, into, a 24-hour trade, which obviously you're not always going to get trades this big. It does require a lot of precision. But you can use this even if you're trading, 1 to 3, 1 to 4R. You can actually turn a 1 to 3 trade into, a 1 to 6 or a 1 to 9, or a 1 to 4 trade into a 1 to 12 or something, if you can scale in effectively. And all the while, you're never adding risk, because let's say the market did actually just push up and take this stop out. We would have lost 1% there, but we would have actually made around 2% there. Okay, so we would have still been closing out the trade for around 0.9R, which obviously isn't the best trade in the world, but it's still a profit even when you've added risk. So that is the idea of scaling in. That is the method, and that's how you do it. Simply wait for the reversal trade or the initial trade to come underway. And when you're executed, wait for the market to make new lower lows, or if you are in an uptrend, obviously to make new higher highs, and then actually scale into that using the supply and demand zones in the trend. And find the good areas, put the order on, trail the stop losses for the first position to the same level that you want for the new position, and then you are cutting out all risk of loss, securing a profit, and also opening the doors to massive profit potential. Scaling in like this is one of the best ways to actually grow an account if you're trying to grow a small account or just grow any account whatsoever. If you can learn to scale into the markets and add positions as you go, you're definitely going to have a good time doing that. I've got a few examples to show you from some of my students in the group as well. One who actually took a 1 to 30 plus scale in recently, and another few little scale ins on Euro USD and other pairs. So here we can see a really nice scale in where we had the initial movement, and then when the market started moving, the secondary entry was used on the zone here to actually get a scaled in entry to continue the market up. Now what this does is cut out all risk and obviously turns this trade, which is already a good trade around a 1 to 3, 1 to 4, into a 1 to 10 R plus position. Here we have another position on Euro GBP from a week ago where the initial trade was around a 1 to 5 and then a scaled in entry, which you can just about see there, which is actually this entry here, turned out with a 3.5 pip stop loss to turn into an 18R position. So you can see massive profit potential secured there, even from quite a small initial position taken. And here is another scaled position where a 12R move was added onto a position that already existed, making this into an absolutely monster trade, big enough for all of November's profits. If you want to learn more about scaling in, trailing stops, and my entire trading strategy for that matter, head over to the link in the description and join my trading academy. You'll also get to see case studies and trade live with me every day while we take moves like this, so you can learn from the process as it plays out. Most importantly, I hope you found this video beneficial. I hope you can take something very useful away from this and actually improve the profits you're making on your trades without adding risk. So thank you for watching, and I will see you in the next video.